the daily edition of Market Wrap with Mo Ansari.
Brought to you by Compact Asset Management,
Providing proactive portfolio management and world-class wealth management solutions.
Hello, everyone, and welcome to Market Wrap. I'm Mo Ansari, president of Compact Asset Management, and you're tuned in as you've been doing so for 2 decades now. And as always, you can call in, and I will be more than happy to share with you my 33 years of trading experience. Today, my guest is Mr. Tom Campbell. He's a former U.S. Congressman representing California's 12th and 15th districts. He is also the former Director of Finance for the state of California. Mr. Campbell is a Republican candidate for U.S. Senate in 2010, and he joins me today to talk about the economic growth proposal he has, thoughts on the current economic picture, and obviously on taxes. Mr. Campbell, welcome back to Market Wrap.
Thank you, Mo. Happy to be with you.
Tom, let's talk a little bit about, first of all, taxes in California. Do we have too much taxation in California right now? I mean, we're in such dire straits. We are one of the highest taxed states, but we still don't have enough money. What is wrong with that picture?
We'd put no constraint on spending. That was the danger. And yes, we are taxed too much. We have the highest sales tax of any of the 50 states and the highest personal income tax, the third highest business tax, and even our real estate tax, which people speak of as being low because of Prop 13, is actually quite high because of the value of real estate. So why are we in trouble? Because we have not constrained the rate of growth of spending. It's simple as that, Mo. And the way to do it is to have a system that we had in the federal government. The last time we balanced the federal budget, which was the year 2000, we had the influence of Graham, Rudman, Hollings. And we could apply that to the state of California as well. What it says is let's not increase the expenditure beyond population and inflation.
So what you're saying is that we are going to the politicians in Sacramento are going to save money and set up a savings account that if we have more money than we can spend, we're going to save it.
You sound skeptical that they'll ever do that.
Mr. Campbell, I've never seen a congressman or any politician, I hate to say it, where they do not spend everything that they get and then some.
Yeah, well, you're right. I fear you're right. But we tried to solve this by an initiative. I was the author of the version of the initiative that became Prop 76, and it was defeated. The public employee unions spent a lot of money. But I think that in a downtime, with Californians worried about our competitiveness, there may be support for an initiative of this sort. So we have that as a way of getting around the regular political systems.
That would be wonderful, and we might be able to do that. Let's go. You were thinking of running for U.S. governor, for California governor, but now you are running for U.S. Senate, given the fact that California is going through massive budget crisis. Do you think the solutions lie here in Sacramento, or do you think they're in Washington?
I think there's some help that Washington can offer. I believe that the fundamental reason we're in our difficulty, though, is the Sacramento problem, which is the rate of growth of spending outstrips the rate of growth of revenue even in good times, and we have no savings. The state government has no savings, no rainy day account that matters. The way the federal government is going to help is twofold. One is when the recovery happens, and there's good news today. Economic news is good. Ben Bernanke's testimony was good. Market is up. There's a lot of good corporate earnings up. Unemployment is still very troublesome, too high. But even that keeps inflation low. And so there's reasons to be optimistic as the national economy recovers. Of course, demand for California's goods will grow. The second is it's possible that in order to get us out of our immediate crisis, the United States can offer something like they did to New York City in its crisis in the 70s, which was to give guarantees for state, in this case bonds, provided that the state then makes the structural changes, not just talk about it, but actually makes the structural changes to ensure a fiscally responsible government.
Mr. Campbell, what are your current views of the economic program of the Obama administration? What are your views on the recent health care bill?
I think that the TARP should have been used for the intended purpose. The Federal Reserve Board came in and helped the banks take the toxic assets off the balance sheets, but the money that had been appropriated by Congress for TARP was then used to buy bank shares, and that's a bait and switch. That should not have happened. So as the banks are returning that money, that should go to reduce the deficit. The president intends to spend it, and I disagree with him on that. On the stimulus package, $789 billion, about $289 has been spent, and it has not resulted in a lot of private sector jobs. It turns out the lion's share has been public sector jobs. So I think that was a misdirection. We should use that money to lower the cost of hiring people in the private sector. I think that the expiration of the lower tax on dividends, to take dividends back from 15 up to 20.
If we don't increase taxes, how are you going to bring the budget deficit, which has ballooned? How would you propose bringing that under control?
At the federal level, the answer is to do what we did in the last time we actually balanced the budget. You set a series of targets for deficit reduction, and the big spenders in Washington then have to sit down with the more frugal or fiscally responsible and meet those targets, or else automatic across-the-board cuts. Secondly, entitlements constitute over 40% of the federal budget. Interest on the national debt close to 8% of the federal budget. The entitlements need to be addressed with a commission, much the way we did it in 1983, that puts together the necessities that are politically difficult, but gives it then to the Congress to vote yes or no on the entire package. That was the Greenspan Commission in 83, and it saved the financial viability of Social Security. We need to do something very much like that for Medicare.
Mr. Campbell, the U.S. and California in particular has large amounts of trade with emerging markets. How do you think America should calibrate its trade relationship with China? As you know, we are having some disputes about the value of their currency, and a lot of people feel right now that we do not have an even playing field where they have free access to all of our markets, but we do not have access to their markets. Is there a way California could tap into the growing economic growth of China, and how do we resolve some of the issues that we are having with China?
My full business recovery plan, the jobs plan to get people employed, is on my website at campbell.org. So people can look at it and tell me what you think of it and maybe improve it. But upon the premise that we are an export economy, you have to have free trade with markets that are open to you. There's two problems with trade with China. Number one, they still benefit from the old rule that says you can treat us poorly provided you don't treat anybody else better. Secondly, China does indeed manipulate its currency. There's no doubt about it. We have decided to postpone calling them a currency manipulator in order to try to get some benefits.
The recent economic data suggests some signs of recovery. What is your outlook on the U.S. economy looking forward?
Well, I'm happy with the good news too, and I sure hope that it's permanent. I have one major concern: the amount of money that we printed over the last year and a half is the greatest growth of the money supply since the Second World War, and it will lead to inflation. The question is when. Ben Bernanke says no near-term signs of inflation. Well, that's probably because it's no near-term signs of hiring anybody. When the economy, the stock market recovery begins to be felt on Main Street, when people get jobs again, when unemployment is not 12.5% in our state or 18% in the Central Valley, and similarly nationally at 9.7%, then you're going to see inflation. So to me, the short term is looking better. I'm delighted. But the long term may not be that long away, maybe a year. When the recovery starts, people get back to work. You have an over 30% increase in the money supply over a year and a half, which will be a tailwind for inflation. One of two things will happen, Mo. Either we will suffer inflation like we did in the Jimmy Carter administration because we printed money, or the Federal Reserve will crank up interest rates to stop that, and that runs the risk of cutting off the recovery. So near term looks better, and I'm happy, but intermediate term, there's a huge problem. It's called inflation. It's called the printing of money because of our federal deficit, and we have not done anything to constrain our federal deficit.
Mr. Campbell, you've been in academia for years, a professor at Stanford, dean of the Haas Business School at UC Berkeley. What are your views about the U.S. education policy right now? How can we ensure American workers and researchers continue to lead the world?
I would say two things. One is the state needs to invest in education, and two, the opportunities for higher education, where the federal government plays a role, have to be geared towards America's competitiveness. And we need the talent that we can get out of our engineering schools and our business schools in order to be competitive. But but the feeding into that system from our high schools is an area of serious concern.
Mr. Campbell, I want to thank you for taking the time out today, coming by our studios here, and being with us today on Market Wrap and sharing your thoughts and some of the ideas how we can fix these huge problems that we have in California and nationally. Thank you again for being with us.
It's been my pleasure, and I love your show, and I want to see you continue to succeed.
Thank you so much, Mr. Campbell. Thank you again for being with us. It's always a pleasure to have you on the broadcast.